Good afternoon, everyone. I'm Joshua Rivera. I'm one of the partners and the general counsel at Blockchain Capital. I've been at Blockchain Capital for almost 7 years now. Blockchain Capital is a venture capital firm in crypto. We focus exclusively on crypto and the blockchain ecosystem. We've been investing for almost 11 years. We have about 2.5 billion in assets under management. That's rising, kind of as we speak, which is great. And we have invested in almost 200 portfolio companies. We've done that across about 7 funds, and we invest across the ecosystem. We are really excited about all the things that BlackRock has been doing in the space. The ETF obviously is the headline, but I think it really goes deeper, and so I'm excited to explore some of those things. And it's great to have you, Robbie. Just introduce yourself and give a little bit of your personal background and maybe kind of how you ended up at BlackRock doing digital assets now for a few years, which has been amazing. And so, yeah, let's start with that.
Great. Perfect. Well, it's great to be here. Mood's certainly a little more upbeat than it is on my Instagram feed this morning. So as Josh mentioned, Robbie Mitchnick, I lead the digital assets function at BlackRock, have been in that role for a little over 6 years now. So I joined in the summer of 2018, was just coming off what was, as we refer to it, the third bull market cycle in crypto that peaked in late 2017. And in those early days, we were focused almost exclusively on what we sort of retroactively label enterprise blockchain. Crypto was not something that we were, I think, like most financial institutions at that time, comfortable with. But enterprise blockchain was a helpful gateway. Ultimately, those sort of private blockchain use cases have not had really any traction, any material traction to show for them. But they did help, certainly in our case, as a stepping stone to where we are today. And we think about this space as being really across 3 pillars: crypto, stablecoins, and tokenization. And so if you look at the things that we've done over the last 2 years in particular, the foundation of which was laid many years before that, it maps pretty closely to those pillars. Crypto is not just our ETFs, IBIT and ETHA, but also the technology partnership we did with Coinbase Prime to integrate that into our Aladdin system. And that supports not just the ETFs, but also the ability for the very significant part of the buy side that runs on Aladdin to actually access crypto. The second being stablecoins. We have our partnership with Circle there. We're very bullish on the future of stablecoins going beyond just crypto markets, really where they are today. And then in tokenization, where we partnered with Securitize and obviously have issued our first public blockchain tokenized fund earlier this year. And sort of underlying that as the fourth kind of key partner across those pillars has been Bank of New York Mellon, who has served as the TA, fund admin, et cetera, really across all those functional areas.
It's amazing. I when I started my crypto journey, this was over 7 years ago. There was a big kind of enterprise blockchain push, and we at BCAP have always been like, I don't know, it seems like not useful. And so I'd love for you to spend 30 seconds on, like, when did it become clear that there was a shift at BlackRock from enterprise blockchain to no, we actually want to dig into kind of these 3 pillars that you mentioned, right? Crypto, stablecoins, and tokenization.
Yeah, well, I think there's not kind of one demarcation point. It's a slow and steady journey at any of these kind of large institutions to get to the point where we are. I think if you look at crypto in particular, which is a pretty good case study and encapsulation of it, 3 big shifts happened, right? One is that you had a tidal wave of capital come into the industry kind of starting 2020, 2021, 2022. And the outcome of that was a major build out of increasingly institutional infrastructure. That previously, this was a much more retail focused space that didn't have the kind of institutional support systems that we would have needed. Secondly, you had subtly shifting political and regulatory dynamics, right? Where just in 2019, there was still discussion about banning Bitcoin, right? It's hard to believe now, especially given some of the people who mused about that 5 years ago. But that was on the table.
I remember it well. Yeah.
That's obviously not on the table. Not by either party in the U.S. at this point, and in no serious jurisdiction in the world other than obviously it is banned in China. And then the third piece is we just saw steadily growing interest from our client base. And when you put those three together, then you start to create comfort around it. The things that we did before we launched ETFs, the Aladdin technology piece I talked about, our Bitcoin private trust, which was really a stepping stone precursor to IBIT, the partnership that we developed with Circle around stablecoins and seeing some of the really powerful innovation potential around stablecoins, that in aggregate unlocks sort of the conviction and level of investment that we're now at.
So I want to shift to stablecoins. I think, stablecoins, maybe I'm stealing a line from you, but stablecoins is probably the foremost best product market fit for crypto that we have thus far seen. We are extremely excited about many others at BCAP, but I'd love to kind of get your insight around how BlackRock thinks about stablecoins and the future of stablecoins. Particularly interested, there's a lot of stablecoin issuers now. There's some of the bigger ones kind of globally. What was the decision to get into the stablecoin market? And then how do you see that kind of fragmenting or consolidating over time? Whatever you can tell us about high-level strategy in that space would be great.
Yeah, well, I think I would actually view stablecoins as the second biggest instance of product market fit in crypto and blockchain today after Bitcoin, right?
Fair point.
But certainly agree, stablecoins have enormous potential. They've demonstrated at meaningful scale already some of that potential, this idea of being able to take cash, take value, transfer that anywhere in the world in near real time at near zero cost in a digital way. That's never existed before, and it's a really powerful breakthrough. But today, it's primarily in the crypto ecosystem. It primarily is used to support crypto trading, right? We think the potential for that is much, much wider, and most notably includes cross-border payments, right? All around the world, domestic payments increasingly are pretty efficient. Cross-border payments continue to be a huge pain point for hundreds of millions of people around the world. And closer to home for us in capital market type applications in terms of fund subscriptions, redemptions, trading, settlement, collateral, margin, all these types of activities that ultimately could benefit from having a digital cash instrument that operates as frictionlessly and programmably as stablecoins do.
Great. I want to move into tokenization. So you mentioned Securitize. So Securitize is a portfolio company of ours. Disclaimer, but personally, it's a very special one for me because it was one of the very first deals that I worked on at Blockchain Capital, and kind of one of the first deals that I structured. And so it's been really exciting to see them grow over time. We had really high hopes for Securitize before BlackRock, but now they've partnered with you guys to build the largest tokenized fund in the world now. Can you talk about that decision to enter into tokenization specifically to launch a tokenized fund? So also, Blockchain Capital had the first tokenized fund. It is very small compared to what you guys have, but it is successful, and we think that it was a pioneering move. It was amazing to see you guys kind of follow on. Can you talk about kind of that process and the catalyst for it?
Yeah, but we hold the Securitize folks in extremely high esteem, and it's been a great partnership there. And I don't think we can underestimate just how difficult the tokenization space has been, right? And it's been, from a regulatory standpoint, from a, chicken and egg problem in terms of institutional adoption, from a build out of the ecosystem and having all the viable parts of it. And the securitized folks have done a really, really good job of building that. And that's helped pave the way for the success that we've had so far. But it's still super early, right? I think that the goal collectively of the industry should be, let's find and sort of coalesce around what at least one asset class in one geography is. We could say we used to do it over here on traditional rails, and now entirely or in majority part, that activity has now migrated. That asset class has now migrated to tokenized format. Obviously, some of these stable value yield projects have the most traction today, so that's a great starting point, and hopefully we'll continue to see more layered on top of that.
Yeah, in my view, so tokenization is great because it enables the one of the hallmarks of tokens, which is very easy transferability. That doesn't always translate to traditional products. So I guess I'd love to get your take on how does tokenization expand beyond stablecoins, kind of best example, but then you have funds. What are the other kind of natural products that that tokenization expands to in the future? And then what is this kind of is this paving the way for real world assets, and kind of how do you view real world assets in a way that maybe is different from most people?
Yeah, I think that we hold a very high threshold in terms of where we'll go and try to launch a new product, right? And for us, with respect to tokenization in particular, we need to have a really clear story around what the unlocks are going to be from this fund existing in a tokenized format versus where it is today, and what problems that meaningfully solves for which accessible investor segments. And today, when you do that exercise, it's still challenging for a lot of asset classes, right? Clearly, there is product market fit, and there's huge positive transformative unlocks happening in these various sort of stable value yield type offerings. But to extend that broader is going to require sort of, one, the steady progression of comfort with digital asset rails and transacting in this ecosystem by more investors, including from the traditional finance space. In other instances, there are regulatory challenges, right? So alternatives funds, obviously, there's a lot that tokenization can do to potentially make them more accessible, more cost-effective, and more liquid for more investors. But there's a lot of regulatory hurdles, as you guys know, because you tokenized that, as you noted, you're pioneers in the space. That's a major challenge, right? And so how do you get the combination of the technology and ecosystem development moving in the right direction with the right regulatory construct to actually start to blow this up well beyond where it is today?
That's great. I want to move into DeFi. So I'm really fascinated. I spent a lot of time thinking about this. DeFi, I think one of my favorite innovations of open, decentralized, disintermediated systems. How do institutions engage with DeFi? Seems like it's really hard, right? Because there are lots of, particularly on the regulatory side, but there are lots of constraints that institutions have around who they can and cannot deal with. How does BlackRock think about that? How do you kind of personally ideate about that? What are the unlocks for BlackRock and other institutions in DeFi in the next 5 years?
Yeah, I mean, I think this is in some ways can be the most exciting part of the space, right? Some of the concepts that are being, they don't think of themselves as proofs of concept. We think about, lending, trading, derivatives marketplaces, but in effect, that's what they're serving as for the traditional finance space. And, I think everyone in traditional finance should be both excited about what's going on in DeFi and concerned because it's potentially transformative, disruptive to so many parts of the traditional finance ecosystem. Obviously, there's a huge regulatory uncertainty element to DeFi, and that is not just Congress has been intransigent or whatever. It's not as simple as you get more, pro crypto Congress. It's all going to get fixed, because there are some really actually difficult challenges that I don't think anyone has a great answer to that balance some of the trade-offs in this space. But obviously, there's some cause for optimism that we may start to see a little bit more clarity manifest in terms of DeFi regulation.
Do you think digital identity is part of that solution set for enabling?
I think no question it has to be, because you need to be able to replicate in substance the AML and KYC processes that exist in traditional finance and traditional banking and money movement in a DeFi context somehow, right? And so decentralized identity seems likely to be a critical piece of that.
Are there projects that you think are kind of interesting, doing it well, not doing it well? We're investors in WorldCoin. I love that project, but it's not for everyone. It's got this kind of Orwellian orb, and so I get where there's hesitation, but we're excited to see that one progress. Anything that you think about that or others?
I don't want to move any token prices today, so I don't think we're going to get into.
Fair enough. I had to ask. I had to ask this wise. So I want to ask you about. Sorry, let me pull up this next question if I can unlock my phone. Yeah. So, okay. Obviously, this is the day after a pretty historic election, U.S. I don't necessarily want to talk politics, but I do want to get your sense. You talked about some of the policy unlocks and regulatory unlocks that had happened over the last 6 years, right? As BlackRock was considering entering the space and strategizing as to how. How do you feel today? What does the current landscape look like for the future? And is that something that you guys actively think about? Maybe it was, hey, if this is the outcome on November 5th, this is kind of how we approach it. Or if this is, if the other is the outcome, this is how we approach things.
Yeah, I mean, I think we're always cognizant of the policy landscape, particularly in an industry like this where things are so fast moving, right? I do think that, some patience is going to end up needing to be exercised, because crypto had actually become one of the few areas where you could have bipartisan constructive dialogue. So if you had a split Congress, then it would have been one of the few things actually that could have sort of been near the top of the agenda. Now, obviously, it's going to be, people think, a supportive Congress, but it may be further down the list from a priority perspective. Like, it'll get there, but it may take some time. So I think that people kind of rushing around thinking like January, everything's going to change, that I don't think is realistic.
Are there, is there specific legislation you think is most critical, or kind of like, should be kind of like nearer in time that, has been batted around, not by name, but just like in terms of type, that you think makes sense? Stablecoin, market structure?
Yeah, it kind of maps to the, we talked about off the top our three pillars in the space: crypto, stablecoins, and tokenization. And it's possible tokenization ends up in one of those other bills, or it's a standalone bill, but that I think aligns pretty well with, frankly, how folks have looked at it from a policy perspective in DC, and seems likely to be how it shakes out.
All right. Yeah, I super excited. Anything else on the horizon that you're personally excited about, that you think would be a good area to continue to explore for the industry, for BlackRock? Kind of parting words here.
Yeah, well, I think it's been a pretty exciting year in a lot of ways, right? Certainly, it's been an exciting year for us on multiple fronts, and it's sometimes lost on folks just how early we are in the adoption game around these ETFs. People look at IBIT, for example, at 30 billion today, and there's a natural sense that must have realized a lot of its potential. But the truth is that we're still quite early in the dialogue with a lot of the investor segments around iShares, and they're undergoing their education journey. We've been very eagerly involved as a partner on that education journey. Bitcoin, ETH, crypto, there's a lot that's difficult and kind of novel for some of these traditional investors. You can see the fruits of that. I mean, how many folks that dumped their Bitcoin on August 5th at 50K because the Japanese central bank raised rates? Like, why? I'm not sure, but that's sort of short. How do they feel today, right? Probably not very good. And so that's a big role that we play with our clients, is helping them think about this from a long-term perspective, thinking about Bitcoin as a unique diversifier, as a potential hedge of various left tail risks in a portfolio. The industry hadn't really been doing a whole lot of that, and so I think that's a journey that a lot of investors are on for the first time, and we're still pretty early.
Amazing. Well, we're all very excited for BlackRock's foray into the space, me especially, because you've legitimized my professional decisions. So thank you. This has been great, Robbie. Really appreciate it.
Thank you, Josh.